trade receivables collection period. So it is trade receivable times 365 divided by credit sales. So let's calculate that. Okay, they have given some information regarding credit sales, so which we have to include. So the first one is the trade receivables is equal to, so trade receivables is 40. So 40 times 365. Okay, then credit sales is going to be equal to 80% of the normal sales, that is regarded as credit sales of the revenue. So revenue means it is cash sales plus credit sales. So you include only 80% of the revenue, which is 800. So let's calculate this. This is equal to, okay, so 40 times 365 divided by 80% of 800 is 640. So that is equal to 22.81 days. Now next one, for the beta we have to calculate similarly. So the trade receivables was at 50 times 360. Okay, the trade receivables was at 50 times 360. And how much of the revenue is considered as credit? It is 50%. So 50%. So this value is going to be equal to, okay, so 50 times 365, 50% of 800 is 400. So that value is going to be equal to 45.63 days. Okay. Now let's comment part B. Comment upon the following: profitability of Alpha stores. So let's use some of the ratios which we had calculated. So profitability ratios are gross profit margin, net profit margin, and inventory turnover. Okay, we can calculate, consider all this as profitability ratio. So the gross profit as a percentage of revenue. Okay, so for the Alpha stores, it is low compared to its competitors like Beta Bargains. So gross profit as a percentage of revenue, okay, was at 40 for Alpha and 47.5 for Beta. So this is a competitor, considered as competitor, so it was low, you are saying. So this may be due to either the selling prices, okay, very is selling an inferior product, or it is selling at a reduced rate. One of the reasons you have to identify. Next one is the, because it has the, in the formula it has a revenue which is quantity times the selling price, you can say this has got reduced, so because selling price has got decreased. Okay, or you have not sold enough quantity. One of the things you have to identify. Next one is the net profit as a percentage of revenue. Net profit as a percentage of revenue for the Alpha stores was at 2.5, whereas Beta Bargains it was 15%. So you can write that and say it is very small compared to its competitor. This may be due to increased expenses. So in the equation, from the equation itself, you should be able to say, because there is an expenses component, you can say increased. Okay, there had the less expenses. Okay, there has been no control of expenses, then this would have got affected. Okay, so more expenses has happened in the business of Alpha stores. There was no control on expenses. That's why we can say that that its net profit margin, net profit as a percentage of revenue was very less. Then inventory turnover. Okay, we can see that inventory turnover for Alpha was 16 times and Beta was 10 times. It was better than that, which means, what does that mean? My inventory is, I'm having low value of closing inventory. Okay, so you can say it from the formula only, because it has the, at the bottom of the ratio there is a closing inventory. You can say this is high if my closing inventory was low. Okay, so the Alpha stores becomes high. Okay, and for Beta it is the other way. So you can say that the inventory turnover for Alpha stores was at 16%, more than the Beta, which was at 10%, indicating that closing inventory was, okay, you can say closing inventory must have been very less for alpha. That means they were able to sell probably due to the reduced prices. They were holding low value of inventory. Then liquidity of the beta bargains. Okay, what are the liquidity ratios? One is the current ratio, asset test ratio, and you can talk about the trade receivables collection period. Okay, so the current ratios. So let's look at the current ratios. Okay, this has to be done for beta bargains. Okay, so current ratio for beta bargains is at 0.97, okay, is to 1, and alpha is at 2.3 is to 1. So we have to write first this current ratio, and you can say that this was low probably because this may be due to high level of inventory. Okay, so in this equation only you should be able to say that, okay, if you see current assets and liability, this has an inventory component. So beta bargains was able to achieve low value of this current ratio because of a high value of, because of the high value of inventory. Okay, there was a high value of inventory which made the current ratio to go down. Then liquid or the asset test ratio, which is calculated without the inventory, it was at 0.56 is to 1, okay, which was slightly below the benchmark of T2 is to 1. Okay, that means that this may be due to high level of trade payables which were not being paid on time. Okay, the benchmark is around 2 is to 1. Then it was below this benchmark, which means it has high value of trade payables. Okay, high value of trade payables. Here we are seeing for the beta bargains. Then we have the trade receivables collection period. So trade receivables collection period was 45 days, which is more than any 30 days, more than a month. So you should say they should bring in some effective credit control policy. Explain the term goodwill. Part C, okay. Explain the term goodwill is an intangible asset calculated by using this formula: purchase price minus the net value of the asset purchased. Okay, so it is offered more than its net value. Okay, if the purchase price was offered, the difference is going to call it as it was offered in goodwill. Then state 3 reasons why Asheni may be willing to pay for the goodwill of a business. Goodwill is paid because if the business that's going to be purchased has a lot of customers, it has a lot of reputation, and it is located in a very good location. So all these are non-financial factors and you will record it as goodwill. Then calculate the value of goodwill that Asheni would have to pay if she were to purchase beta bargains for £100,000. So let's calculate. So what is the total assets of beta bargains? Let's add up. So one is the receivables and non-current inventory. Okay, non-current. So what are the assets? So first one is, so the total assets value we have to calculate. So the first one is, this is equal to the receivables, which are at current assets, trade receivables, that is 50,000. Okay, 50,000 trade receivables plus the non-current plus inventory. Okay, let's put the inventory also, which is at 36,000. Okay, and then you have the non-current assets. That value is going to be equal to 80,000. So when you add up all this, you will get 166,000 pounds. Okay, 166,000 Now next one is the liabilities. So let's write what are the liabilities. Liabilities are the trade payables. First one, what were the trade payables? It was at 55,000. Okay, 55,000 plus any cash and bank was become a liability for this. Current liabilities and the non-current liabilities, which was a bank loan repayable, so that way also had become current liability. So all the liabilities you have to add for the business, so that value is going to be equal to 89,000. Okay, so let's add this. So add the total assets and total liabilities of the business, then find the difference between these two. Do these two, total assets minus, okay, total liabilities. So that value is going to be equal to 166,000 minus 89,000. So that value is going to be equal to, so that value is going to be equal to 23, that is equal to 77,000. Now let's calculate the goodwill. The Asheni is ready to offer 100,000 purchase price, and okay, but it has the net current assets, net assets at 77,000. So the difference, 23,000 pounds, which Asheni is offering, is called as the goodwill. Okay, it might be due to one of the reasons the business had as a in its portfolio. Then evaluate the use of ICT in a business. So when you use ICT, means greater volume of data can be processed at a faster pace, and it will also be more or less accurate data, because it will involve automatic double entry, automatic mathematical calculation, and you can also report generation can be done automatically. Okay, so then it is also very speed because of this automatic double entry system and reduction of errors, and you will have a lot of digital storage space. And the security can be improved if you are able to set a password so that nobody can view it unless the financial people want to have a look at the accounting books. So but the disadvantage is it's going to involve some cost, the cost of installing the hardware, software, and training of the personals, and also to maintain, okay, these softwares. There will be some cost to the business, and also sometimes it could be called as a security threat, because sometimes it can break down, or there may be virus which can corrupt the data, or your data itself could be hacked. So all this can lead to data losses through the system failures. So, but in conclusion, you can say that it is better to use ICT for recording business accounting purposes, as it helps to process large volumes of the data, and you can have a backup software